Hello, everyone. This is Jordan. Welcome back to the Daily Gold YouTube channel. Thank you so much for tuning in. To all of those who are new, thank you so much for coming to our channel. I appreciate your visit. And every Friday, we do a weekly wrap-up and a look ahead for the precious metal sector. And it's Friday, so that's what we're doing in this video. Rough week for precious metals, down across the board. But for viewers of this channel, not a surprise because we have been talking about it in recent weeks. The likelihood of a correction beginning in precious metals, things got really overheated. And look, that's it in a bull market. That's good. It's good to be overbought. But at a certain point, you need to rest. You need to correct. That's where we are for precious metals. Gold down 2.5% on the week. Silver down 3%. The miners down a little bit more than that. GDX, GDXJ down about 4% or a little bit less on the week. Silver, stocks, SLVR, SILJ down about 5% on the week. So orderly declines. We're looking at it for the big picture. Let's look at where we are now and let's think about what could be coming over the next week or two. Let's get right to it. Okay, so starting off, as we always do, this is a market overview, looking at various different markets. These are 2-month candle charts, 20-day moving average here and 50-day moving average. And look, in the last few weeks, we basically saw gold relative to the 60-40 and gold relative to the stock market, gold stocks as well. It blew out to the upside, okay? And so gold against the S&P, this nearly reached 0.70. Now, this was a big breakout point. 0.50 broke out from a 4-year base here, shot up all the way here to nearly 0.70. And this is, I believe, 10, 11, 12-year resistance, something like that. So this is the next resistance level. It got really overbought. Naturally, it's pulling back. Most of the damage has been done here. Maybe it goes down a little bit more, then it stabilizes. But clearly, gold is correcting, and the stock market's had a pretty good rally. And breadth indicators, Zweig, breadth thrusts, and other things, they're telling you the rally can go farther. That's a topic for a whole nother video. The bond market's still trading in a range with respect to the 10-year yield. A couple days ago, looks like we're breaking down. Maybe we're going to test 4% here or go below. Now we got a rally to end the week, so we don't know which way it's going yet. If there is a recession, if we can't escape that, this probably will come down lower than 3.9% and go lower than that. And we'll talk about the stocks here. They are correcting as expected. Same thing with gold here, so we'll get more into that in the next couple charts. Okay, so gold daily here. This is the 200-day moving average, this thick line here. This is a 150-day here. Silver daily here. This is the 400-day moving average. I sketched this out last night, and this looks pretty good. I mean, it's just a guess. This isn't something I'm trading or investing on, but this is a thought of how this correction could play out. Maybe it stabilizes here in June, July-ish. Here's the 200-day coming up like this. That's my guess. Maybe it tested around here. I mean, if we have a sharper decline, we should get a bounce here from this level. If we get a sharper decline after that, maybe it comes down and gets really close to the 200-day at that point. But this is another way it could play out. Move down, stabilizes a little bit, rallies a little bit, comes back, rallies more, then it comes back again. So that's typically how you see in a bull market for gold, these correction and consolidations play out where, you know, it's not going to go like that to the moon after we get a low here. It's going to grind up, rally a little bit, pull back, stabilize, and eventually later in the year probably break out. I mean, we'll see what happens, and that view could change, but that's my thinking right now. But focusing on the very short term, we could get a rally from here, but there's still going to be more selling, and this level here could be a magnet of support. And that would be a 15% correction. We're already down. I think at this point we were down 9%. So a lot of damage has already been done, but there's still some more to come. With respect to silver, big resistance at 34.35. The strong selling in the last couple of days. The weekly candle is not that great. Here you have the 400-day. It bounced off that. You can't see it when the stock market crashed intraday. My guess would be it's probably tested again, the 400-day here. 28, 29. I mean, this is really strong support. Gold-silver ratio rallied up, closed at 105. Intraday, it was higher than that. Gun to my head, I think we could see one more pop to the upside before it peaks. So even though I've been saying I like the value in silver, I really like the value in silver stocks. They're looking good, but We got to let this next wave of selling happen. Then that'll be much closer to the point where there's much lower risk in silver and silver stocks at that point. So we need to see another round of damage there first, I think. With the weekly chart here for gold and silver and the weekly line chart for silver, not a whole lot new based on what I just said on the daily charts. I mean, you can see clearly here's the strong resistance. There's also this level here. If you look at the monthly, this comes up just below 2,800. So it's important to know all these support levels. I don't think the market is going to go here, but again, you got to keep everything in mind. At this point, I'm more interested in silver with respect to where will the next low be. Is silver going to be able to hold again 28.29 where there's strong support? Again, you have the 400-day, 80-week moving average coming up like that. Or might we get one pullback back down to 27? Again, you have to keep multiple scenarios in mind. I'm looking at other moving averages. This is equivalent to the 40-month exponential moving average. So I'm looking at all these longer-term moving averages, see where they come in. So this comes in at 26.58. I'd love for this to be at 28 right now. I'd love to see even more moving averages solidify that support at 28. That would encourage me with respect to silver not breaking 28. But we do have to keep that possibility in mind. And not a fan of this price action here. Crash move, big rally. Now it's fading, bearish candle here. So this could dribble back down here to 30.29. And again, I'm very happy to be wrong, but I think this level, silver will test this level again. And at that point, we'll evaluate if that's really where we want to be buying in this correction, or we might need a little more selling. So that's where we are. One more thing here. Let's keep the big picture in mind. The very big picture for precious metals is really, really bullish. And I made this analog chart today. So we're looking at gold's performance after its initial breakout move. So gold makes a major breakout, trends higher significantly, then it's a peak, has its first notable correction. That's where we are. The first notable correction post-breakout has begun. And so this is the 7th breakout gold has made. Now, there's 3 other ones, breakouts to new all-time high. So I think those 3 are the best comparisons. But I also included 2006 here. So this is 2006, the weakest of these moves. But you can see the chart here, and this is based on the current scale. So the weekly peak was 33.30, something like that. This is weekly data. So we're looking at, again, all of these points where gold peaked after a breakout, then corrected. So this is the correction here. You can see these are the averages. So this is the average of the 4, whereas this longer one is the average of 1972 and 2009, because I like the 1972 comparison, but this is 1978 when we had the blow off top. This is 1972 where you had a huge move higher, then a big correction. I believe this was 73, this correction probably, 73, before another leg higher. So I think, again, I think 72, 73 is the best comparison, but do I think gold can make this strong of a move like it did here and here? Probably not. 2009 here, I think gold will make a stronger move than that. So I combine them into this line here. And so look at the averages. You know, the averages about 12 months from now, they're right here. Both averages put us at about 4,500 12 months from now. What does this data and chart tell us about the correction? It could be towards the end of summer before we really get going again. If we're looking at the averages, they would start to see a rally middle of the summer, but a real acceleration early in the fall. Now, moving on, let's talk about the stocks and wrap up this video. First thing here, quick commercial for our premium service, the Daily Gold Premium. Visit thedailygold.com/premium. Scroll down there at the bottom to subscribe. All of those subscribers, thank you so much for your business. I appreciate you. Those of you who are not subscribers, we cover the best juniors, the best miners, the companies that we think have the highest fundamental quality while having the most upside potential at the same time. And people, this is a very critical time, because if you think about that last chart, this correction over the next couple months, this could be one of the last chances to buy the highest quality juniors, the best companies at reasonable prices before they get too expensive. There's still a chance to buy those companies And I did an update last week talking about the 4 watch list companies, our top 10 table in those companies. I assessed how much upside potential do these companies have over the next few years. And the numbers are really good for a lot of these companies. And I'm not taking into account 5,000 gold or $100 silver. So if you buy the right companies, you can do really, really well in this bull market. And we're correcting now. So a lot of these stocks, you're going to be able to buy 10, 15, 20% cheaper. And people, stock picking is extremely important. You want to have the right companies in your portfolio. You don't want to own laggards. You don't want to own companies that are not going to be leaders in the next few years. So I hope you will join us at the Daily Gold Premium. Now, moving on. Let's wrap this up, talk about the stocks. Let's keep the big picture in mind. Last month or two, big breakout in gold stocks across the board. Gold stock indices, we can see here in yellow, had the breakout, quick retest, big move higher. But now the sector's in a correction. Gold's correcting, silver's correcting. The stocks are going to correct. This is a rough sketch of maybe how it could play out in GDX. So I would not be surprised to see a retest of the breakout again or something close to it. Now for GDX, what does that mean? We're looking at 41. You look at a monthly chart, 41 is really strong support. We're at 47.08. That's a little bit above 10%. What does that mean for GDXJ or GOEX here? Maybe it corrects a little bit more. So a little bit more than 10% for GDX, for GDXJ and GOEX, which I think is a better junior index. Maybe they correct a little bit more than 10%. So I hope that wasn't too much of a word salad. But keep the big picture in mind. After this correction ends, minors and juniors really have a chance to really accelerate to the upside. Now, taking a short-term look, so we have GDX here, GDXJ, SILJ. Silver juniors are, of course, the weakest and lagging. You got this strong support here at 10. This is the 200-day moving average at 1169. So maybe we see a little bounce here, but ultimately, there's a risk that this could come back down towards this level. Now, looking at GDX and GDXJ, yes, they are at initial support here. They have come down, initial support here, initial support here. Maybe there's a day or two more of selling and you get a little bounce, or they're setting up, or you could get a little bounce next week because they've come down to support. But zooming out for a couple weeks or a month, look at the stronger support. Look at the stronger support for GDX right here. This is what we were talking about, 41. This level down here, perfect retest of the breakout. But you also have some support around 42.5. So keep these in mind. Same thing for GDXJ. Looking at, call it 50, 51, also 52.5. So again, very short term, could get a little bit of a rally. That next wave of selling after that, if that brings the market down to these strong support levels and our indicators are oversold across the board, that's the time to start taking advantage of weakness. That's it for the video. Even though it's a tough week for precious metals, hope you all had a great week. Hope you have an even better weekend. As always, leave a comment. Let me know what you think. I love to hear your opinions. And thank you so much for tuning in. And I'll talk to you guys again in the next video.